Hi everyone, just a reminder that this YouTube channel contains factual information only. It does not constitute financial advice, and the general nature of the content might not be applicable to your personal circumstances. Okay, checking off our first chart is looking at the global X uranium. So as you guys know, I've done a couple of videos on uranium a couple of months ago, looking at the technical analysis, and it was looking quite strong. So we're going to do an update now and see how things have panned out since then. If you want to look back on those videos, here are the two to check back on. So you can see here 3 months ago I had uranium or Uranimoon with a question mark, and then here uranium update, uranium breakout technical analysis about 2 months ago. So go back and watch them if you haven't seen them, and once you've watched them, now come watch this one and you can see how the journey has unfolded and what I was looking at then to help me identify that this that has happened was a high probability of happening. Okay, so our URA chart came up on this beautiful impulse wave, and we knew it was an impulse wave because of the beautiful 5 waves up. Okay, and rule in Elliott wave is that it will correct down in the bottom 1/3 of that wavefall. This is extremely bullish because what it has done is it hasn't actually broken below the pivot lows. So as you can see, it is still actually a series of higher high, higher low, higher high, higher low, higher high, and all of these are still actually higher than that one. That's the thing that people don't get. Problem is, a lot of people thought uranium was bearish because most people jumped on uranium on this. So they jumped on it, went up for a few weeks, and then since November 2021, over a year and a half ago, it's been doing nothing but going down to sideways. On top of that, a lot of people believed that this was going to be a fake out. Okay, because again, fake out, fake out, fake out. Now it's happened a lot of times as well. Another rule from GAN is that often the 4th attempt will break. So you can see here we've had our 1, 2, 3, and this was our 4th one that ended up pumping through. All right, so few little key things was coming down in this bull flag, and it has now broken out. What's actually really impressive is this is the weekly candle that we have actually had a weekly breakout here. But even more so, how I even knew this was going to happen as well was if you look at the monthly, because again, big money follows the monthly because they're not in it to flip it over a couple of weeks. They want to hold things more. And if you look at the monthly, this is actually the breakout zone on the monthly. See how it's never actually had a candle close above? We had a monthly close above that candle, which is a sign of strength. Again, going off Dow theory, he believed the only thing that you should listen to is the candle close. Everything else that happens within that candle is market noise and can be manipulated. Okay, so monthly, especially the monthly close, is super important because it shows you where this thing might be going for multiple months, which is why big money will follow the monthly and above, not the daily and the manipulated minor trend, things like that. So looking at that, our next point of resistance now is around that $27 mark. Okay, so you would expect, as sellers have come in, anywhere around this $27 to $30 range is where sellers have come in, you would expect them to come in again. Okay, because people would be anticipating maybe a double top, things like that. So nice clear run at the moment, and then around here is where you would expect sellers to step in, as they previously have before. So as you can see, a good 25% increase on the uranium ETF. And remember, this is the ETF, so all of them combined. If you look at some of the individual uranium stocks, some of them are up nearly 100% just during this time. Okay, because some of the stronger ones will outperform and then some of the weaker ones will underperform. All right, so after URA, you have your URNM, which again is another uranium ETF miners that we can check out just to get confluency from multiple charts. The same thing here, you can see on the monthly, it's broken its downtrend. We had a nice monthly close above its last pivot high. See, lower high, lower high, lower high. All of a sudden, we don't have a lower high, we've broken up. Okay, steps are going down, now we've broken up. Okay, so not only have we broken above that pivot low, we have now broken above that pivot low. We've broken above 2 pivot lows. And we have now officially formed a higher high, higher low, high high. We have changed market structure to an uptrend on the monthly. Let's look at the weekly. Okay, again, you can see lower low, lower high, lower low, lower high, higher low, lower high though, lower low, and here. So see how they're going down, down, down. That's a downtrend. We've broken out of that downtrend, which is why that was important. It's retested at as support. But the key thing I was looking for was this weekly close here where we got above that pivot. Okay, we got above, we have broken, we no longer have lower highs anymore. Now we are approaching this one here. All right, so, but again, weekly, higher high, ABC, higher low, and we're just about to make a higher high on the weekly as well. Okay, so, you know, we are only 6 days into this month. We need to see if this month, this weekly can kind of get up here. And like I said, with the monthly, this gets up and this monthly candle closes above the $38.90, then you are in an official uptrend on the monthly. If this was to then sell off here and it ends up being a wick, some kind of shooting star, then we might have something to worry about. But until then, we'll just go with it until more data unravels itself and we can keep tracking it a little bit more. So that was $30 before and now it's up at 40. So you've had a 30% increase on the URNM. Okay, next one to look at is your junior uranium miners. So that was down here at $14.79. And what you want to look at these because again, if uranium is turning bullish, money should start to flow into the risk on side of that sector as well. So, you know, this thing should start performing, and we know it could be really good is if the junior miners then start outperforming the larger miners as well, because then, you know, money is flying into the risk on stuff. So let's unpack the junior miners and see where that's gone. So $14.79. So yeah, up at $20 now. So you've had a significant increase on that one as well. Nice, beautiful option on the monthly at the moment. You can see we're running into a bit of resistance here. Weekly is the important thing. We have a higher high, higher low, higher high. We've broken out above this one. Okay, so we are in an official uptrend on the weekly, and daily just keeps trading. So up, bit of sideways, up, bit of sideways, up, possible another bit of sideways, we'll see. Or was that lots of accumulation before massive breakouts? Okay, but beautiful uptrend, nothing to worry about there. Okay, so this is what I was talking about with the junior miners against URA, because what this ratio shows you is risk on within the uranium sector. All right, so this was down at 0.7485, so say 0.75. Let's see if that's increased, because we want this to be breaking out to show that it's turned into a risk on environment. And look at that. We have broken out resistance, beautiful walk-off accumulation, broken up, tested a support, boom, moon. We have risk on within the uranium sector. Okay, so that's great. Come down, we've accumulated, now we've broken up. So while it's above that 80 zone there, it's an official uptrend. It's tested where the sellers were before, they've turned into buyers. The ratio is in an uptrend. Okay, then we looked at the energy sector and we talked about the fact that, you know, energy has been a horrendous investment since the GFC, which is why a lot of new investors turn up their nose against to go technology, technology. What they don't realize is they've only been investing in one cycle. Money flows in and out of different things. So yes, they are correct. It has been horrendous since the GFC. Downtrend, downtrend, downtrend. However, we are coming up to a major resistance. You can see support has been flipped to resistance. If we were to break out of here, we are breaking out, well, we've already broken out of the downtrend, tested support, but we are breaking out of a major support resistance zone that's been held for the last 15 years. Okay, that is very significant if we were to break out above that one. So let's look at the energy sector, because uranium is a part of the energy sector, to see if that might be, if that has broken out or if it's close to breaking out as well. Okay, it is right there. You can still see the support is still resistance. We are there right now. It is double topping, so it has not broken out yet. We would be looking for it to come out of there, which means sellers are exhausted. And then if that then happens, then break out. Again, remember I said about normally the fourth touch is the one. So see, we've broken up 1, 2, 3, and this is your fourth one coming up. Okay, so slight pullback. Will it go up now? At the moment, it is still in a very clear, very clear uptrend now. So as long as it holds that uptrend, it's in an uptrend. If it were to reject here, come down, break through the trend and break below that low, that's when then we possibly could be going into a downtrend. So at the moment, strong momentum going into a major level. Keep an eye on that one to see if it will break out. So then we want to know, okay, well, if energy possibly might be turning bullish, it should outperform the XJO, okay? Because if energy is going to perform well, it will do better than all the rest of the market. So what we want to look at is XEJO against XJO, and that is the ratio showing you whether or not the energy might move. Okay, so again, like I talked about, see 09 here, energy has been an underperformer compared to the XJO. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then all of a sudden, there's a bit of a base here, a bit of walk-off accumulation. It's gone up. We now have a possible high, higher low. Now we need to see if this breaks. So does this change into an uptrend here? That is what we're going to be looking for. Then that would show that the XEJ will then outperform the XJO going off this chart if it starts moving into an uptrend. So, well, if the energy sector is bullish, what we want is, okay, well, what will be bullish within that sector? And that is uranium within its own sector. So URA should outperform the energy sector as well. And that's how we can find strength within, because, there's lots of things in energy. There's oil, there's uranium, there's coal. So we want to see, okay, is uranium specifically going to be looking well within that sector? So you can see uranium has been a horrible investment. We know that energy's been bad, but uranium in particular was even worse since 2011. Down, 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 down. So terrible investment. It then flattens out, starts to go sideways. We've then moved into an uptrend. High, 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 low, high, 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 low, high, high. And then it's been a terrible investment again since November, which is when it topped out, coming down. But again, what's happened? It's flattened out. So what we're looking for now is it going to break out of here? Because if we break out of there, what we've done is finish our correction, sideways accumulation, we move back into an uptrend. So this one is very close to breaking out to show that uranium will be strong within its own sector as well. And this was the point that a lot of people found interesting in, is that, gold prices are measured in dollars, tend to move in sync with the price of uranium. And the most simplistic level is because you both mine them out of the ground. The thing that going off history is that uranium tends to lag the gold price by 7 months. And what I've talked about is in October, gold had its massive breakout, and a lot of the gold miners doubled within that time. And back when I did that video 3 months ago, it was 7 months after that October, which is why I talked about the fact that, historically, uranium has that 7 month lag. We are there now. It's one to keep an eye on to see if it will follow its path that it has always followed. So looking at that, yes, it exactly played out again. So that 7 months after gold, which broke out in that October, around that May, June is when uranium has started to then push up itself. So yeah, it's little things like that that can really help inform just knowing the cycle periods, just the seasonality, things like that can also help with your technical analysis as well. So then the other thing that a lot of people get wrong is they measure commodities against the US dollar, which is shouldn't happen, because if you think about the US dollar back in the Great Depression, $100 bought you a car. $100 does not buy you a car. However, 5 ounces of gold bought you a car back in 1932, and 5 ounces of gold today will still buy you a car. Okay, so if you're ever measuring if something's undervalued or overvalued, you should measure it against gold, because gold is something that's been around for thousands of years and has been a store of wealth. Okay, even though it does underperform or outperform stock market and stuff, that's irrelevant. It has been money for thousands of years. So that's what you should be measuring it against. So now we're going to look to see if uranium to gold ratio, what it's doing as well. Okay, so there's a few key levels I'm looking at here. This one in particular is a huge level. Okay, and then it already broke out of the other one. All right, so what you can see here, this is what I'm looking at, is that, you know, again, uranium was terrible compared to gold. Terrible, terrible. It's now found a base. What you can see, what it's done here is it's actually forming what's called an inverse headed shoulder, or this is Wyckoff accumulation. So it's where you're into a sideways market, and what this thing here is called is the spring. It's the shakeout, because as you can see, support, 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 support. If anyone bought that dip, where do they have their stop loss? Right below. The market drives it down, grabs all that liquidity, accumulates it, drives it back up within the range, and now it's ranging around again. So if you look, it's kind of like an inverse head and shoulder, shoulder, head, now it's forming the next shoulder. If we were to break out above that level, then that would complete the Wyckoff accumulation there, and then it will send it up. All right, so it's already broken the decline. It has a high, 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 low, high, high. We're back in an uptrend, but we are still overall in this sideways trend here from 2015. Okay, so for 8 years, this thing's been going sideways, possibly being accumulated. We're waiting for it to break out above its major resistance level here to confirm that. Then we have an official higher high, higher low, higher high. We are in an uptrend on the larger time frames, weekly, monthly, all that. We're back, you know, in an uptrend for the first time since ever. Okay, so yeah, that's what I'm looking at there. That looks like a yeah, like I said, possible spring shakeout. Get out all the weekends thinking it's going lower still, and then yeah, it goes up from there. So again, Nasdaq has been an outperformer for the last 15 years. It's been fantastic. Things run in cycles. Let's now see if uranium to Nasdaq is going to outperform. Okay, so we are still at that level there. Okay, but what we have is a higher high, a higher low. Okay, it's found its support. So uptrend, sideways. We have broken out of here. Okay, double bottom, broken above the neckline, tested support, and now pushing up. So we're coming up again for our next touch. 1, 2, 3, 4. Most likely, judging off the other ones, this one might break as well. So let's see. So support, resistance level, we break out above here, higher high, higher low, we go into an uptrend for uranium to outperform Nasdaq. Okay, that is it, guys. I hope that helped. You can, you know, if you haven't seen, like I said, that first video and that second video, it's good to go back and watch them and now watch that, because you can see how TA can help predict where things might go. And in particular, it's really important to look at the key ratios and things like that, because the problem with technical analysis is it relies on the person analyzing it. If you're looking at one chart, you then increase the odds of human error a lot more. If you're looking at multiple charts, like I just showed you like 12 different charts, it's really hard to look at 12 different charts wrong. Okay, so you're decreasing your human error, which means you're increasing your probabilities, which means you're increasing your percentage wins, which means you're increasing your profit margins. So it's all about, yeah, looking at key charts, key ratios, and looking at the big picture. Okay, because if you look at one chart, you can have, even if you don't mean it, you can have unintentional bias towards that, because especially if you're already holding it. If you're already holding something, you already want it to be on the bullish side, so you're kind of looking towards that already. Okay, so, you know, get rid of that emotion, look at multiple charts, let them all tell you the same thing. I always say markets tell you a story, you just need to know where to look. You can clearly see that the market was telling you a story with uranium 3 months ago, and that story has now played out. Okay, best of luck, everyone. Hope you enjoyed the video, and I look forward to seeing you on the next one. Take care, everyone. Make sure you like and subscribe.